Hey, mental health and wellness practice owners, are you struggling with cash flow? Safi Russell here, CPA, with your next S-Corp Straight Talk chat today. So, first things first is definitely building up a cushion of 3 to 6 months of expenses if you have enough profitability to be able to do that, while also making sure you're paying yourself reasonable compensation and having taxes taken out on that reasonable compensation sufficient to cover your tax obligations. So what I mean by that, when you're taxed as an S corp in your practice, you are going to receive a W-2, and then you're going to receive a K-1, which is the remaining profit left in your business. That remaining profit in your business still shows up on your personal return, and you're still responsible for those taxes. And so an S corporation is a pass-through entity. It doesn't pay its own taxes, maybe at the state level or city level, but majority of it is still at your level. So with that being said, when you're filling out a W-4 for yourself, in your payroll system, you want to account for not just the salary you're paying yourself, but also the extra income that will be reported on your return from your K-1 schedule, aka the excess profit left in your practice. When you do that, each paycheck is going to have enough withholding coming out to cover all of that income. And let's say, you have another source of income, you have investments, or if you're married filing jointly, your W-4 determines how much taxes are taken out of your check. The idea is to either break even or maybe paying a little bit more or just owe a little bit at the end to minimize taxes and penalties and large tax bills. So if the S-Corp is a good fit for you, you want to ensure you're maximizing the benefits of it. First, setting your reasonable comp, then accounting for any other profit you have remaining in your W-4 so that your tax liability is broken up per pay period throughout the year. So at the end of the day, a couple things you want to work on are ensuring that you're profitable enough to put aside that 3 to 6 months cushion, or don't accept insurance payments, right? Work with clients who self-pay, or work with corporate accounts or do workshops. Think of other ways to bring in revenue so that you can build up that 3 to 6 months cushion, and that should help with cash flow. Also, if you are taxed as an S-Corp, ensure you have reasonable compensation for yourself and that your W-4 accounts for both your W-2 income, your salary, and the extra income profitability left in your S corporation. All right, that's my suggestion for managing cash flow issues when you have an S corporation. If you're looking for support in learning if an S corp is a good fit for you, let's hop on a preliminary call and have a quick 30-minute consultation to see if the S corporation strategy is a good fit for you. I'll see you in the next chat. Take care.